Scene script. Have you ever wondered about the history of Bitcoin? In the year 2008, a spark ignited in the world of technology and finance. This spark was an idea, a concept, a revolution, all encapsulated in a 9-page white paper. The author of this white paper was an unknown entity, a ghost in the machine, going by the pseudonym of Satoshi Nakamoto. The white paper outlined the concept of a digital currency, unlike anything the world had ever seen. A currency that was decentralized, not controlled by any government or central institution. It was a currency based on an innovative technology called blockchain. Blockchain technology, as proposed by Nakamoto, records every single transaction in cryptographically linked blocks, providing an unprecedented level of security, transparency, and decentralization. This very technology underpins Bitcoin and every other cryptocurrency that has followed in its wake. But what exactly is Bitcoin? It's a type of money, yes, but it's not a coin you can hold in your hand. Bitcoin is digital. It exists only in the virtual world. But the principles that govern its existence are as real as the laws of physics. Fast forward to the 3rd of January 2009. This was the day the Genesis block was mined, marking the birth of Bitcoin. This process of mining is a fundamental pillar of the Bitcoin network. It's through mining that transactions are validated and new Bitcoins are created. However, in its early years, Bitcoin was little more than a fascinating concept known only to a small group of tech enthusiasts and those concerned about financial manipulation. Its true potential was yet to be realized, its story yet to unfold. The birth of Bitcoin wasn't marked by fanfare or celebration. There were no headlines or breaking news alerts. Instead, it was a quiet revolution, one that would slowly but surely begin to challenge the established norms of finance and technology. This marked the beginning of a technological and financial revolution. In its early years, Bitcoin was a little-known concept, its adoption limited. This revolutionary digital currency, free from the control of any government or central institution, was merely a blip on the world's financial radar. With its decentralized nature and the security offered by its underlying blockchain technology, Bitcoin quietly began to attract the attention of a niche audience. Tech enthusiasts, always on the lookout for the next big innovation, were among the first to embrace Bitcoin. Its potential to transform the financial landscape was not lost on these pioneers. They saw in Bitcoin a way to move away from traditional banking systems, to step off the well-trodden path of financial transactions and head into uncharted territory. But it wasn't just the technophiles who were drawn to Bitcoin. Those concerned about financial manipulation also saw potential in this digital currency. Its decentralized nature meant it was immune to government interference and manipulation. In a world where traditional currencies can be subject to dramatic fluctuations due to political instability or economic crises, Bitcoin offered a beacon of stability. Yet, despite its potential, Bitcoin remained largely under the radar in its early years. Its value was volatile, its future uncertain. Many dismissed it as a passing fad, a novelty that would soon fade away. Its adoption was limited, its usage confined to a small community of early adopters. But as we know, all that was about to change. Bitcoin was on the cusp of a breakthrough, ready to step out of the shadows and onto the world stage. Its decentralized nature, once a cause for skepticism, would soon become one of its greatest selling points. The world was waking up to the potential of digital currencies, and Bitcoin was leading the charge. However, Bitcoin was about to step into the limelight. In 2013, Bitcoin hit a milestone, surpassing $1,000 for the first time. This was a significant moment in Bitcoin's history, proving that this digital currency had the potential to become a powerful player in the financial world. The allure of Bitcoin was growing, and so was its user base. People started to take notice, and the adoption of this pioneering cryptocurrency began to spread. However, Bitcoin's price was as volatile as ever. Its value fluctuated wildly, a characteristic that would become synonymous with Bitcoin. This volatility led to a significant price correction shortly after it hit the $1,000 mark. Despite this setback, it was clear that Bitcoin was here to stay. Fast forward to 2017, a year that would forever be etched in the annals of Bitcoin's history. Bitcoin was on a roller coaster ride, and it was climbing. The price of Bitcoin skyrocketed, reaching nearly $20,000 per unit in December. This was an astronomical increase, one that made headlines around the world. People were in awe of Bitcoin's remarkable rise, and yet, they were also wary. The fear of a bubble loomed large, and it wasn't long before a massive correction took place. Bitcoin's value plummeted, but it was far from defeated. This unprecedented boom had a profound impact. It drew global attention to Bitcoin and the broader world of cryptocurrencies. Investors, both seasoned and novice, were intrigued. They saw potential in Bitcoin, and they wanted a piece of the action. This led to increased investment in Bitcoin and the development of alternative cryptocurrencies or altcoins. These altcoins, while not as well known or as valuable as Bitcoin, offered new opportunities for investors and further expanded the cryptocurrency market. This boom drew global attention, leading to increased investment and development of alternative cryptocurrencies, or altcoins. The world was now watching, and Bitcoin was at the center of it all. This marked a new chapter in Bitcoin's journey, one that was filled with possibilities, challenges, and above all, change. Opening. Bitcoin's blockchain technology also sparked interest in industries beyond finance. As the world got to grips with the revolutionary concept of Bitcoin, it wasn't long before the potential applications of its underlying technology, the blockchain, began to capture imaginations. The world started to see that blockchain had far-reaching implications that transcended the scope of financial transactions. One of the most significant uses of blockchain technology is in facilitating cross-border payments. Traditional cross-border transactions can be slow and expensive, often involving multiple middlemen. However, with blockchain, transactions can occur directly between parties, regardless of location, in a secure, transparent, and swift manner. This potential has led to a wave of innovation in the remittance and international payment sector. Then there are smart contracts. These are self-executing contracts with the terms of the agreement directly written into code. They automatically execute and enforce the obligations of the parties involved. Built on a blockchain, these contracts allow for a level of transparency, security, and efficiency that traditional contracts simply can't match. This has opened up new possibilities in fields as diverse as real estate, supply chain management, and even entertainment. And let's not overlook the potential for transparent transaction records. Blockchain's immutable ledger means that every transaction is recorded and cannot be altered. This attribute has significant implications for industries that rely on trust and verification, such as healthcare, education, and logistics. However, as with any technology, blockchain is not without its concerns. Its association with Bitcoin has drawn attention to issues of volatility and potential use for illegal activities. But it's essential to separate the technology from its application. Just as the internet has been used for both positive and negative purposes, so too can blockchain. Ending. Despite concerns, Bitcoin's underlying technology was beginning to reshape various industries. The applications of blockchain are vast and varied, and we're only just beginning to scratch the surface. As we continue to explore and innovate, there's no telling what the future may hold for this groundbreaking technology. Opening. The year 2020 was pivotal, with major companies like Tesla and Square announcing significant investments in Bitcoin. The landscape of cryptocurrency experienced a seismic shift as big players in the corporate world began to recognize Bitcoin's potential. Tesla, led by the ever-controversial Elon Musk, and Square, under the helm of Twitter's Jack Dorsey, were among the trailblazers in this respect. They not only invested heavily in Bitcoin, but also started accepting it as a form of payment, further legitimizing its status as a digital asset. However, it's important to remember that the ride has not been smooth. Bitcoin's volatility has remained a constant companion, with its price fluctuations often compared to a roller coaster ride. This unpredictability, while exciting for some, continues to raise eyebrows among traditional investors. And then, there's the topic of regulation. The decentralized nature of Bitcoin and other cryptocurrencies has been both a blessing and a curse. On one hand, it offers freedom from traditional banking systems and government control. On the other, it opens the door to potential misuse and fraud. Governments around the globe have been grappling with this conundrum. Some countries like Japan and Switzerland have embraced the crypto revolution, enacting laws to regulate and foster its growth. Others, like China and India, have been more cautious, imposing restrictions and even outright bans. In the United States, the stance has been somewhat ambiguous. While the Securities and Exchange Commission has taken steps to regulate initial coin offerings, or ICOs, it has yet to establish a comprehensive framework for the broader cryptocurrency market. Meanwhile, the Internal Revenue Service treats Bitcoin as property for tax purposes, adding another layer of complexity to the issue. Closing. Today, Bitcoin remains a subject of intense debate and analysis. Its role as a potential store of value against inflation, or a hedge against financial manipulation, continues to attract interest. Despite its continuing volatility and regulatory uncertainties, Bitcoin's potential to disrupt traditional financial systems and its growing acceptance as a digital asset cannot be ignored. The Bitcoin story is still being written, and its ending is yet to be determined. In summary, Bitcoin has evolved from an innovative idea to a global financial phenomenon. Born from the mind of an anonymous entity known as Satoshi Nakamoto, Bitcoin introduced the world to the revolutionary concept of a decentralized digital currency built on the groundbreaking technology, blockchain. In its early days, Bitcoin was a mystery, its adoption limited, yet it appealed to those seeking a currency free from government or central institution control. The first major milestone came in 2013, when Bitcoin's value exceeded $1,000, sparking growing interest and adoption. The Bitcoin blockchain technology has since piqued interest beyond finance, with potential applications in cross-border payments, smart contracts, and transparent transaction records. Today, despite its volatile nature, Bitcoin is increasingly accepted as an asset class, with significant investments from major companies. Its history is marked by highs and lows, but its impact on the global financial and technological landscape is undeniable, challenging established norms and prompting a fundamental reevaluation of currency, value, and financial technology.